Traders, Anthony here. I am looking at the NAS100. Okay, there's a few things about this chart that we need to talk about. These markups that I've got here are these thin candles. Have a look at this thin green candle back here. There's nothing left and right of it between this the high and low of this range. Same thing here and this one, right? So what we've got is one-sided trading, a bullish imbalance, 4-hour time frame, and then up here as well. What I'm getting at is there's risk involved, and there's a possibility that at some stage that this looks to rebalance and heads down into these levels. Now, I'm looking for a buy opportunity. Obviously, I'm not going to be setting a limit order down low, but if I pull this swing low, swing high pullback here, for example, then a buy in around this level here with a stop under the value range to the left makes a lot of sense. But what I'm getting at is that could get we don't know when this is going to tank, right? And with these levels under here, it's going to this will look to hit these levels at some stage. So understand the risk. So I'm going to go in conservatively, keep your risk conservative, consistent. And if you're going to speculate, then actually we'll grab a Fibonacci, swing low, swing high. I want to get in around 50 to 61.8% on the fib. That coincides really well with this bullish imbalance right there. So that makes sense in terms of a potential limit buy if I'm going to speculate. Something like that. Push my target above. Stop loss, yeah, I'm going to go under this low here. All right, so I'm looking for a stop under this value range swing low, and well and truly under this imbalance low, range low. That's a valid setup, okay? And we're looking at quite a nice outcome. If that plays out, we've got about a 4R, around about a 4R outcome. Let's just round it off to 4R. There it is. That's speculation. Now, there's a couple of ways to look at this. You can do that and take the risk, and that's if you're not in front of the chart. Be consistent. I mean, you might be trading, risk is $10 a pop or $20 a pop, or it could be 100 or 1,000, depending on your account. But keep your risk conservative, in relation to the account. And be consistent with it. So if you're trading $20 risk, trade it on every trade. $20 risk on every trade. Okay, so whatever it is you're willing to risk. And that way you can manage your risk well, and you can measure your success, etc. That's one idea, is to go with that. Understand that it could trade further south, right? And then manage your risk accordingly. Now, the other way to get involved with this is if you're in front of your chart. I'll be watching this into the London Open or the New York Open mainly, and I'll be going down to a 15-minute time frame. Now that I've got the 4-hour marked up, I know what my levels are. I know where I want to get involved. Here's the thing. In fact, I want to show you something. I'm going to look to buy, right? I mean, you could even short that, but I'm going to be looking to buy. London Open, New York Open, there's one price action that plays out. I mean, look, it's just everywhere. Let's just see if I can find a perfect example. All right, let's just assume that this is a retrace. You want to wait for the range, a bit of a push up here, down, up, back, all right, and we're off, okay. This move here, that one, and I mean, and all of this building liquidity under. We know that traders are bullish, all right. They're going to be setting stops under here, big time. Especially when this starts to push up here. Retail traders pile in more stops, and big money, they need the liquidity to pair their orders to be able to do that, to go in the direction they want to trade, right? So they're going to take out those stops. They've paired their orders, and we're off. And look, the other thing that you want to keep an eye out for is, if you have a look at this candle here. Let me just clear everything. Shout out to ICT. This is not my idea, and I'll try to simplify something that could be quite complex. If you're a beginner trader and you're unfamiliar with this price action, okay, see how this trades off here with a vengeance, right? You want the range, and you want the stops under here to be hit. You know that your higher time frame bias is bullish. You want the displacement, and this is giving you your entry point. So you've got this thin candle right there, nothing left and right of it, right? There's a candle high on the left and the candle low on the right. That's the imbalance that you're looking for an entry when, if the market trades back down and hits it, and then we see it trading higher highs, higher lows, pile in. All right, there's your entry point. So let's just keep this concept with us and go to the current. Yeah, and look, the thing is, look at these the imbalances that are begging to be traded back into at some stage. It'll hit that. Okay, so just understand that the market will look to pull back down into these levels at some stage. So I'm going to be looking to short. Well, yeah, you could counter trend trade that, but here's the thing. Just have a look left. There's going to be a couple of things to consider. Okay, one is we've got this thin candle here in balance. We can mark that up, right? That's a potential target. But the other thing to consider is under here we've got this range, and we have sell stops sitting here. We've got this range, and we've got sell stops under here as well. This could hit this level and rotate, or it could head further south. If you're in, I mean, look, and we can speculate, we can set our limit order here, the stop loss under, and our target like I showed you before. But here's the thing. Let me just delete those couple of things here. If you're in front of the chart, you want to watch this into the London Open or the New York Open. And I'm going to be waiting for price. So I'm just going to pull my thing across here and mark this up for you. Right. It's either gonna do it here through the imbalance, or we come back down in here. You want to look for this price action at either this level or under a range where there's liquidity, and that looks to target the lows, the stops that are resting under here, and or this is going to trend down. We're going to see lower lows, lower highs, but at some stage we're going to see a break of structure bullish. But while this is trading south, I hope this is making sense, while this is trading south with lower lows and lower highs, and be watching this in front of the chart, right? London Open, New York Open, right? It's going to either happen here, or right there, possibly, okay? Either one, right? There's your liquidity under here, and it hits that. The thing you want to be waiting for is wherever this decides to drop down and wiggle around in terms of the range, right? You don't want to see it do something like that. There's going to be a breakout to the upside. So let's clear everything wherever it happens to land. It's really simple, guys. London Open or New York Open, you're going to be waiting for this, that, and break of market structure bullish, and you're in. Simple as that. It could happen here, it could happen under here, right? Or it could happen further down under here. Just wait for this rotation. Simple. That's it. What else can I say? That's the NAS100. If you're in front of the chart, look for that into the London Open or the New York Open, or speculate. And with that, guys, love you to comment, but I hope you gained something of value from the video. Shout out to ICT, really trying to simplify something that could be quite complicated. With that, have a great day, safe trading, comment, and we'll see you in the next video.